Germany, if we look at the ETFs, the German international ETF has actually outperformed the S&P and the Russell in the latest move in November. So if you look at when the market bottomed out and started rallying, that was the start of this month. We've actually had Germany up 10%. And when I say Germany, I'm talking about EWG. And the reason for that is because that contains the FX exposure as well. Because these are the German stocks then FXed into dollars. And that index is up by 10%. And it's outperforming the S&P, which is up around 8%. And the Russell's up about 7%. Okay. So the fact that Euro has rallied back to 109, along with global stocks rallying as well, that has helped this German ETF outperform. So out of all of the things we're tracking in equity land, this probably looks the most overbought, this EWG. And so if you were looking to play a pullback in stocks because they've had such a good run, we think this might not be a bad place to play it. And the fact that it's touching its 200-day moving average right now as well means that might have some near-term resistance. Okay, so whilst we do believe strongly in the year-end rally scenario that we've been talking about, the move so far has been so swift due to the CPI catalyst this week. We might get some post-OPEX consolidation. Often that happens, right? We go into a bit of a window of weakness post-OPEX. We've got that coming up next week. And we think that if you buy some tactical downside, you've got a week or two into the end of November where you might be able to monetize that and do okay. So that's the idea. So again, we're not going to be chasing the market higher after this sort of run. So we're looking for smarter ways to maybe play some consolidation. Now with EWG, you need to look at where the DAX dashboard is, but also where the Euro dashboard is. So you can see on the DAX, the main German 30 stocks, we're in buy puts. We've got the front end vols have completely collapsed. We've got the skew that's completely collapsed as well. So we're looking at low vol, low skew, low short dated vol, and the carry has been slightly negative. All of these things are supportive of the idea of buying some puts. Okay. Now let's look at Euro, because obviously EWG is the combination of both Euro and the DAX, let's say, or something close to the DAX. Same story. Euro vols are pretty much on their lows. We've got buy put screening here. You've got skew, cheap end of the range. We've got a 6 handle on the volatility of Euro, which is kind of about as low as it gets. And the carry's negative again. So all these things are supportive to the fact that owning short-dated options in Euro and the DAX, i.e. EWG, is not a bad thing to be thinking about right now. Okay. And if you've got a directionally bearish view in the near term, then that is supportive. Okay. So the trade we're looking at is a simple